Today I want to have a look at Caterpillar stock, and within the 3 minutes of this video we will figure out its intrinsic value and analyze all of its fundamentals. So right away we can see that Caterpillar has a trailing free cash flow payout ratio of only 36.42%, which I very much like, as they can direct a lot of their free cash flow into innovation, share buybacks, or paying down debt. Their dividend yield is sitting at only 1.5, which is below average, but they make up for it with their dividend growth, which we will see later in the video. Now jumping straight to the 9-pillar analysis, we can see that the company gets a rating of 9 out of 9 with all the pillars in the green. Now let's first have a look at the most important metric, and that is the growth of the company. We can see that they have been growing their revenue at a rate of 5.41% yearly, free cash flow at a rate of 27.58% yearly, and net income at a rate of 31% yearly. Now if we have a closer look at these three growth metrics, we can see that the revenue has indeed been increasing very nicely. The net income has also been increasing. There was a big jump from 22 to 23, and the free cash flow has as well been increasing with a big jump from 22 to 23. So I really do love the profits growth of this company. But now let's have a look at its valuation. Normally when a company starts growing at such a high rate, its valuation becomes inflated. So when we jump back to the 9-pillar analysis and have a look at the 5-year P ratio of Caterpillar, it has been sitting at 20, which is in the range we like to see. Now if we jump to pillar 1 and have an even closer look, we can see that currently the P ratio is sitting at 17.43, which is actually even better than the 5-year average. And so even though Caterpillar has been rising in stock price very aggressively, their PE ratio actually lowered, which I very much love, and means that investors are paying less for the company's earnings. Now let's also have a look at the price to free cash flow, which over the past 5 years was sitting at 17.86 on average, and currently is sitting a little higher at 19.71, but that is still in the range we like to see. So even though Caterpillar has been rising very aggressively over the past few years, they are still very fairly valued. Another thing I like about the company is their decreasing shares outstanding and their 5-year profit margin in the range we like to see at 26.99%. Their long-term liabilities over the 5-year free cash flow negative dividends is also sitting in the range we like to see at 0.94, which means that they generate enough free cash flow to pay off all their long-term liabilities, so their debt essentially, while paying out their current dividend. And finally, we can also have a look at their consecutive dividend growth, which is sitting on average at 6.54% yearly. And if we have a close look, we can see that indeed the growth is very steady. And not only that, the growth rate has actually been increasing throughout the past few years, except for the past 12 trailing months when it was lower than the 5-year average dividend growth. And the reason for that is the very small fall in the free cash flow year over year, which I don't really mind that much. So overall, Caterpillar is looking very, very nice. But now let's calculate its intrinsic value. So first, jumping to the Graham's formula revised, we will plug in the 5-year earnings growth estimate at 8.39% into the next 5 years and calculate an intrinsic value of $259.91, which is actually 45% overvalued compared to the current trading price. Now jumping to the second valuation model, we take the free cash flow of the company, plug in a growth rate of 5.7% into the next 10 years plus, and plugging in a discount rate at 8%, we get an intrinsic value of $443.13, which is higher than the current trading price. Now for the third valuation model, we want to compare Caterpillar to two of its competitors, and when comparing them, we get an intrinsic value of $393.23, which again is higher than the current trading price. And for the final valuation model, we have a look at the dividend growth of the company, and as we know, this is quite strong. So when we project a growth rate of 6.67% into the future, we get an intrinsic value that is higher than the current trading price, sitting at $410.77. And finally, arriving to the ultimate valuation, we average out the 4 valuation models and get an intrinsic value of $376.76, which is only 0.26% higher than the current trading price. So we can quite safely say that Caterpillar is currently very fairly valued. But if you want to apply a margin of safety of 10%, you will be able to buy the company at $339.09. And with that, I hope that you enjoyed the video. Make sure to leave a like and subscribe, as it really helps me out.